Hello everyone, hope you're all doing really well. It's been a while since I made a video, so I decided to make one for you all. There's a lot to get into, so let's dive straight into the video on what just happened late last Thursday. So the European Central Bank, we all know that they are remaining extremely dovish. Primarily when they look at the Eurozone, they don't think the Eurozone will grow much at all. They're actually downgrading from a 1.7% GDP growth rate all the way down to 1.1% growth rate. Now, when you actually look at this person, Mario Draghi, essentially what I want to do is to kind of explain to you the role of the central bank and particularly the individual. So the European Central Bank, they really administer the monetary policy for the Eurozone. And the Eurozone, it consists of 19 European Union member states, as you can see in this picture here. Now, I just want to kind of give you some background. So really, Mario Draghi, he took over in 2011 as the ECB President. And he, during his whole time, he has not raised any interest rates. In fact, he's been dropping the interest rates all the way effectively from about 1.5% from when he took over in 2011, all the way down to essentially 0%, as you can see here. And Mario Draghi, he's actually stepping down by really in Q4 of 2019. So, he's not going to be raising any interest rates at all the whole 2019. And lucky for him, because essentially what he's doing is he's passing the baton to someone else to handle the mess. And essentially what you can see in this interest rate graph here is that over time, the interest rate has been going lower and lower after the 2000 recession, after the 2008 recession. We've just been going lower and lower in the Eurozone. And all these cheap rate money to borrow is not helping the economy at all. And we're still at a total stall. Now, more importantly, what I want to point your attention to is that what happened on Thursday was that, again, like the GDP growth rate was reduced from 1.7 to 1.1%. And what Draghi was saying was that it is essentially due to weak economic data and primarily the uncertainties due from the global trade war and also Brexit, which has caused damage to the Eurozone economy. And this is a very sharp pivot from what the ECB said that they thought they would do, which is to at least hike in at least one time throughout the summer of 2019. But that is no longer the case. There is no interest rate hikes for the Eurozone for 2019. They're pushing it out all the way until 2020. Now, what I want to show you here is really what the ECB has been doing with their balance sheet. Very similar with the U.S. Federal Reserve. They've been bloating up their balance sheet. Just to give you some context here. So the ECB, they said that they ended their quantitative easing program in December 2018. This is after, as you can see, after they inflated their balance sheet from $3 trillion since 2015, it was about 2.5. It went all the way up to $5.5 trillion. Now, to be clear, the ECB, they're not continuing with the quantitative easing program. Rather, they're just reinvesting the principal that they received from bonds maturing, which will continue to provide some liquidity into the economy as opposed to sharp tightening. So that's currently what the ECB is doing with their balance sheet. Now, I kind of want to talk to you about really the annual growth rate in the Eurozone. It's been stalling, and I think partly because of this, like the ECB and Mario Draghi, they've not only have they announced that they're going to not raise any interest rates, but in addition, they've also mentioned how they will introduce very cheap loans for banks to borrow with the idea of boosting credit to household and other businesses. Like more specifically, the ECB say that they will lend banks up to 30% of value for certain business loans. And this will actually be beginning in September 2019 and should end in March 2021. And this chart here is just to show you like really the performance. Year to date, the Euro Stoxx 50 is an index which really comprised of the 50 largest and most liquid stocks in Europe. This just shows you like the performance. So year to date for 2019, the Euro Stoxx 50 is up 11% compared to the S&P 500 being up 12%. So not too much going on. Obviously, last week the market reacted quite negatively, but we'll kind of see what happens along the way. So really, I think what's happening is like, where do we think the Eurozone is heading, right? Like, obviously, we're at already negative or really 0% interest rates. And I think the next thing that's going to happen is that the Eurozone will be heading towards negative interest rates. That is not out of the question. And the idea of this is that essentially you will deposit $100 in the bank and the bank will pay you $99 or a lesser amount at a later date. Now, the idea is to actually force consumers to borrow more, to actually buy more things to stimulate the economy. But to be honest, guys, this is not true at all. If you look at the Japanese economy, which actually has negative interest rates, believe it or not, consumers actually incentivize to not put money into the bank and just hold money themselves and not spend money because they know that the economy is not strong, so they need to preserve as much capital as possible. And if they're not stimulating and buying things, guess what? The economy is essentially in a downward spiral. So that's kind of what I'm thinking will happen to the Eurozone right now. So really, overall, like, you know, the main message here is that, again, just late last week, the European Central Bank and the president, Mario Draghi, said that they're not going to be raising any interest rates for the whole 2019. They'll be offering very cheap bank loans in hopes of stimulating the economy. And I think because of this, there's a lot of implication for what the U.S. Federal Reserve will be doing, which is probably going to affect the U.S. Federal Reserve and make them quite dovish as well. So we'll see what happens. We'll keep an eye on it. But guys, if you made it this far into the video, and I would really appreciate your support if you dropped a like, if you comment below, and if you subscribe to the video, you'll get more of these financial news videos in the future as well. So thank you all for watching. Again, really appreciate your time. And until next time, take care. Bye.